Bloomberg Audio Studios. Podcasts, radio, news.
This is the Bloomberg Daybreak Europe podcast. Good morning, it's Friday the 9th of January. I'm Caroline Hepker in London.
And I'm Stephen Carroll in Brussels. Coming up today, the US Supreme Court could decide as soon as today if Trump's sweeping global tariffs are illegal.
Iran cuts off phone and internet access as demonstrations across the country grow.
Plus, why starting a blog is the new Silicon Valley trend.
Let's start with a roundup of our top stories.
The US Supreme Court could rule as soon as today on the legality of President Trump's sweeping tariffs rolled out in April of last year. America's top court has scheduled this Friday as an opinion day when it issues decisions in cases already argued. A ruling against Trump would leave the US government on the hook for tens of billions of dollars in tariff refunds. The levies in question have so far generated roughly $150 billion for the US Treasury. Zoe Tillman is Bloomberg's senior legal reporter in Washington.
Back in April, there were a handful of lawsuits filed saying that the president simply doesn't have the authority to rely on a 1977 emergency powers law to order these kinds of tariffs. And lower courts repeatedly agreed with the challengers, said he doesn't have authority to do this. The case made its way to the Supreme Court. And in the weeks after the court heard arguments on November 5th, we've seen this onslaught of activity in court as companies have come in with their own lawsuits saying, we agree, we don't think it's lawful, and if the Supreme Court strikes this down, we want our money back.
Zoe Tillman speaking there. The Trump administration has signalled that if the Supreme Court rules the tariffs are illegal, it intends to reimpose most, if not all of them, under different legal provisions.
Internet and phone services in Iran have been cut off after protests ramped up overnight in the country. Unverified social media videos show thousands taking to the streets in the capital, Tehran. The unrest started on the 28th of December in Tehran's Grand Bazaar after a sudden decline in the value of Iran's currency and is emerging as a challenge to the authority of Supreme Leader Ayatollah Ali Khamenei. The US President Donald Trump says he has warned Iran's regime not to resort to violence.
I have put Iran on notice that if they start shooting at them, these people are totally unarmed people. And they love their country. They want something to happen. Look at their country. They've gone back 150 years. But I've told them that if they do anything bad to these people, we're going to hit them very hard.
Despite President Trump's comments to Fox News, the human rights news agency estimates the state crackdown has already killed 42 people.
The US is considering paying Greenland's residents up to $100,000 each. That's according to Reuters, which cites sources saying the payments would be intended to convince Greenland to split from Denmark. Speaking to Fox News yesterday, US Vice President J.D. Vance said Trump's warnings about the territory should be heeded.
The President of the United States is saying very clearly, you are not doing a good job with respect to Greenland. We're going to make sure we defend America's interests. And I think the president's willing to go as far as he has to make sure he does that.
US Vice President J.D. Vance there was speaking after France's Emmanuel Macron criticised recent US actions during his annual speech to French ambassadors yesterday.
That's the big risk of the international order that we live under. The US is an established power, but one that's gradually turning away from certain allies and moving away from international rules that it promoted just recently, whether that's with regards to trade and certain elements of security.
President Macron speaking there at the Elyssee's Conference of Ambassadors, where he also highlighted what he called a growing temptation to divide the world amongst great powers.
Now on to corporate news. Rio Tinto is in talks to buy rival Glencore. A tie-up would create the world's biggest mining company with a market value of more than $200 billion. The new negotiations come a little over a year after previous talks between the two firms collapsed. Clara Ferreira-Marquez is Bloomberg's managing editor for commodities and energy in Asia.
They were talking back in 2024. At that point, it was Glencore making a move for Rio. It looks like this time it might be the reverse. They're a very obvious combination. Rio has been interested in iron ore, and Glencore has a lot better copper assets, really, than Rio does.
That was Clara Ferreira-Marquez speaking there. As demand for copper has never been stronger, the metal soared to record highs above $13,000 a tonne earlier this week.
China's inflation is accelerating at the fastest pace in nearly 3 years as higher food prices hide deeper concerns. December's CPI reading showed prices up 0.8% compared to the previous year, in line with estimates. The increase in food prices drove the rise, but the rest of China's economy has been plagued by weak consumption and price wars. Producer prices fell by 2.1% in the same period for the 39th straight month of declines.
Now to the UK, where there's been a surge in the number of people at risk of losing their jobs. That's according to new figures, which will likely set off alarm bells at the Bank of England. Bloomberg's Tiwa Adebayo has more.
More British workers face losing their job now than at any point in almost 3 years. That's according to fresh data from the government's insolvency service about the number of potential redundancies, which are at their second highest level since the pandemic. It's a spike that's especially concerning given job losses typically slow over the festive period. Now the pressure is on policymakers at the Bank of England to continue lowering interest rates this year as the labour market shakeout intensifies. In London, Tiwa Adebayo, Bloomberg Radio.
And those are our top stories for you this morning. Looking at the markets, equities are trading within a really narrow range because there are two big risk events that we just mentioned, the US payrolls report and this possible Supreme Court ruling on President Trump's tariffs. The Japanese yen above the 157 level. The Swiss franc is also ticking lower. It looks like the dollar's in line for the best week since November. Oil prices extending gains, so investors clearly are monitoring what's going on in Venezuela and Iran. Brent crude futures up by 0.8%, $62.47. Stock futures for the US Stocks 50 futures also gaining 0.4%. Those are the markets.
Well, in a moment, more on what could be that huge day for Donald Trump's trade tariffs. Plus, we'll hear from Michelle Hussein's interview with Trump's trade advisor, Peter Navarro. But another story that we've been reading this morning on why even the most high-tech executives are going low-tech. Bloomberg opinion columnist Dave Lee has been writing about a subject that plunges me certainly right back to the middle of the 2000s, blogging. A simpler time on the internet. At the end of December, the Microsoft CEO Satya Nadella started his personal blog called SN Scratchpad. And Dave actually writes that it's the format rather than the content that's most interesting about it. It's very minimalist style, uses a simple template, no bells or whistles. Nadella's name doesn't even appear on the site, although there are 2 links to his social media profiles. Why this approach? Dave says maybe it's a new cliche in the tech world, allowing the sector's visionaries to opine freely without a filter, although he does point out the blog was read by 2 senior Microsoft figures before being published.
Okay, I think this is really interesting. I mean, look, on the downside, asking me to read your blog feels a bit like having to do my HMRC tax forms. But on the other hand, at least that it shows that maybe ideas matter. Maybe they are back in vogue. Human content and thought perhaps are actually valuable to someone out there. That gives me some hope.
I'm quite nostalgic about that moment when the blogosphere was a big thing on the internet, you know, before we all started screaming at each other on social media. I think this could be a very interesting idea of people moving more back to it. Of course, we've had the Substack phenomenon as well, which has attracted pop stars, Troye Sivan among them most recently, joining the fact of being able to try and publish those direct messages to people. So perhaps another shift in the fabric of the internet. You can read Dave's full piece at bloomberg.com/opinion.
Let's bring you more now on the expected decision today from the US Supreme Court on whether President Trump exceeded his powers in imposing his blanket tariffs last April. Our trade czar, Brendan Murray, joins us now for more on this. Brendan, very good to speak to you. What exactly then is the court looking at?
So the court is looking specifically at the authority that the president used to impose tariffs under this so-called International Emergency Economic Powers Act. The short term for it is IEEPA. And this is an acronym that applies to about 3/4 of the tariffs that President Trump has collected so far in his second term, amounting to about $150 billion of a total of $200 billion. So there's quite a lot at stake here today. We don't know exactly whether the Supreme Court is going to rule today. We just know they're going to start reading some opinions around 10 a.m. Washington time. And because this tariff case has been and expedited, we do expect it to be among the first of these opinions to be addressed this year. So, but it could spill into next week as well. But we are on high alert for anything the court might say about ruling either for or against the centerpiece of President Trump's economic policies.
So if the court does decide that the imposing of these tariffs was illegal, what would it mean for the tariffs that have been enforced up until now?
Well, it would mean he would have to come up with other ways to collect revenue and impose tariffs, and he has at least a handful of other legal ways to do that, and they could do it pretty quickly. The administration could impose a 15% across the board tariff on countries using a different authority under its code in the law under the number 122. We've heard about 232s. Those are authorities he can use. Already he has on steel and aluminum and autos. There's another authority with another number, the 301s, and those could also come. And we expect that the administration would move pretty quickly to essentially replicate the tariffs that are out there under this other authority that's being challenged with these new authorities. So tariffs aren't going away. They just might be coming back around if the court rules against President Trump under these different authorities that he has.
So a lot of people are wondering then, what about the money that has already been paid under these tariffs? What would happen?
Yeah, that's going to be the big question. You know, $150 billion is a lot of money when you're talking about the amount of refunds that companies could seek if these tariffs are ruled illegal. It's going to be a messy situation. There are thousands and thousands of companies that would want to apply for these refunds. They essentially have to, petition the government for these, and the customs agency recently said that they're going to go to all electronic refunds starting in early February. So that could help expedite the process. But it's going to be an administrative nightmare, really, to try to return the funds back to the companies that paid them. Remember, many of them would have said to their foreign suppliers, "Hey, can you give me a discount?" Many of them would have passed some of these cost increases along to consumers, and so it gets really kind of complicated to see who actually paid for these tariffs. But the bottom line is the importer of record is the one that paid for them, and they're going to want their money back from Uncle Sam if the Supreme Court rules against Trump today. Okay, Brendan Murray, our trade czar. Thank you very much. Stay with us. More from Bloomberg Daybreak Europe coming up after this.
Now, US President Donald Trump's tough talk about China and tariffs can be traced back in large part to the economist Peter Navarro. He's a well-known China hawk. He's written books arguing that Beijing poses a threat to the US economy and its national security. Now, on this week's The Michelle Hussein Show, Navarro talks about US-China relations and the upcoming Supreme Court ruling that could unravel many of President Trump's tariffs.
Let's start with the case itself. The case is about whether you can use the emergency powers of the president to impose tariffs.
And it was your advice that he could. You were clear that this was the way, the IEEPA, this was the act to use.
If the Supreme Court wants to essentially ratify the president's use of tariffs under IEEPA, the law is on its side and our side. And the law is simply this. There's two salient points for your viewers. One is the question of whether a tariff is a tax. And in this context, in an emergency context, it's absolutely not.
Okay.
Tariffs, taxes,
the Supreme Court takes a different view?
The revenues are incidental. Now, this is the argument that the government's lawyers
are putting forward.
The other issue is a language issue, is whether tariffs are a legitimate form of import restriction. And of course they are. So the Supreme Court has the ability. Now, with respect to Plan B, whatever Plan B is will not be as good as Plan A. So we have to recognize that.
It will also be expensive, won't it? Because Dr. Navarro, lots of companies will have to be compensated, won't they, for tariffs?
Depends on what the decision
refunded
is.
For the tariffs they were charged?
Let's not go there until we have to go there. I mean, I'm very confident that we have a very, very good chance. I mean, the law is on our side. The law is on our side here. So let's win that. Now, if we don't win, there's the whole alphabet number soup of things we've got. We've got the Section 232s, which we are using aggressively already on things like steel and aluminum, on lumber, on critical minerals, on pharmaceuticals. We have that. We have the 301 section, which we used on China to impose tariffs, which we can do on any country in the world that's cheating us.
But if this case goes against you, it will affect your standing, won't it, in the White House? Because you were the one who was convinced that this route was the right one to go down with the bulk of tariff policy. Would you consider resigning if the case is lost?
Oh, of course not. That's silly. I mean, and why? It's like I'm part of a trade team. We've got Scott Bessent as the Treasury Secretary, Howard Lutnick is the Commerce Secretary, Jamison Greer as the United States Trade Representative, and myself, with J.D. Vance weighing in, and the only person who matters is President Trump. Okay? So we are proceeding as the vision of how to go about this was crafted not by me, but by a group of people. We're doing exactly what we should be doing. We've anticipated contingencies, but we think that the most important thing to do now is focus on winning that case at the Supreme Court. That's where we're at. If we lose, then we have a plan B. It's not for me to talk about that to the world because I don't think we're going to lose. But if we do, we are certainly prepared.
Imagine the refund bill, which some are saying could be as much as $100 billion.
I think you're basically making the case why what we've done is a very good thing. I mean, think about it. We inherited from the Democrats who spent money, as we say on this side of the pond, like drunken sailors. Okay. Just totally fiscally irresponsible, like crazy stuff. And we were looking when we got into office at a fiscal cliff that was going to crush us with higher interest rates, the inability to finance it. And this tariff revenue, if you just cost it out, is the difference between a dangerous deficit and a healthy pay down in our debt.
We're coming towards the end of the conversation, and I quite often ask people what they do at the weekends, and I'm conscious, like, what are your weekends like? Work.
Yeah. It's like when you're working for the White House, it's like being at sea or being on deployment for the military. Right? You're working every day, and I know better than most. Because I remember the last day from the first term, and it was like, you're leaving, and wow, there was some stuff we left on the table we could have, should have got done, and we didn't. And I try to tell people who are there, it's like, look, the clock's ticking, and we got a lot of work to do for the American people. Spend as much time as you can without it influencing or harming your family time. But this job is not a job. It's not a job. It's a mission. I mean, I don't, it's like if this were just a job, I wouldn't be doing it because I'm at the retirement age and I could just as easily be working on my next book or whatever.
This is Bloomberg Daybreak Europe, your morning brief on the stories making news from London to Wall Street and beyond.
Look for us on your podcast feed every morning on Apple, Spotify and anywhere else you get your podcasts.
You can also listen live each morning on London DAB Radio, the Bloomberg Business app and Bloomberg.com.
Our flagship New York station is also available on your Amazon Alexa devices. Just say, Alexa, play Bloomberg 1130. I'm Caroline Hepker.
And I'm Stephen Carroll. Join us again tomorrow morning for all the news you need to start your day, right here on Bloomberg Daybreak Europe.